Good morning, everyone, and welcome to the European crossover webinar. And we've seen the euro pare back a bit from its New York session, just slightly, not any big moves whatsoever, but see this pare back. And the dollar index inversely has pulled up a little bit. It was under some pressure, so we pushed back up a little bit higher, but once again, nothing out of the ordinary. Crude oil is also stabilized from its pullback here. So we were under pressure yesterday. We've found a little bit of a bid here as the market was just a bit overdone. Correspondingly, we saw also the, we'll switch into that. Seeing the Canadian dollar itself going in pullback yesterday, was in a position where it looked like it could potentially break out. But we had on the bias chart resistance at 34.49. Looks like just about right there where it ran out. We got up as high as 34.45, and the bias chart from yesterday we had it at 34.49. And so I knew if we got past that, that would open up the door for 35.05. Remember from the Asian analysis, but we had that at 34.49, and there we go. Here it is, right there. Looked like it was about ready to go, and then we yielded back. Yielded back a pretty decent amount too, if you look at it. Came down so a good more than 60 pips. If you're looking to buy for the longer term, this was a decent little dip. Not great. It could have gone a little bit further, but not bad. I guess 33.86. It came right into there. Look at this area right there. Spoil, I guess, especially since with crude oil itself. Gold came up here to that 1323 we were referencing here in the Asian analysis. We've eased back a bit. Just a hair bit, but we did make it up to this 1323, and potentially we can still see higher prices, but that was also in our actually it's been for a couple of days anyway, been that 1323. We pulled back just a bit from there, but longer term, I think that we can eventually move higher here. And cable relatively quiet after easing back, just relatively quiet here. Not a whole lot of action, and we're going to get to that. And then also taking a look here on the dollar yen here. We still have the possibility to come down here to the pivot, but we've seen interest rates also, and we'll take a look at that also when we look at the dollar yen. So make a move too. So probably a little bit of an ease back is due here after coming here to the 977. Eventually, I think we can make it to the 927, but we shall see once we get past that pivot area here. We talked about this market being able to close above the 1905. We took that dip and we came into this 1902. That's what we had for our support with minute, and we're looking for leaving an area just below that. But it did dip just a hair bit below that. But there was that 1902. We're looking for our area here. And longer term, I think this will be a good area here. See here, the 1902. We just dipped just below that. And we've kind of surfaced back above this. I think that's a decent area if you're looking for a little bit longer term move higher here. Let's go on and move on now to the news. In the end, UK lawmakers voted last night by a comfortable 27-seat margin to take control of Parliament for a day to explore ways out of the Brexit impasse. At this stage, however, no majority exists for any of the options, from new Brexit compromises to no Brexit at all, that they may consider in a series of test votes on Wednesday. Today could see something of a lull in Brexit activity. Theresa May has yet to schedule a third vote on her deal. Thursday's a possible slot, and lawmakers will be devising the rules for Wednesday's proceedings. But the whiff of crisis remains. Oh my God, this is so old. Local media report that May has now privately offered to set a date for her departure, thank God, in exchange for hardline Brexiters backing for deal. And there's growing talk that a snap general election will have to be called. The morning's NC data on the French economy are good news for Emmanuel Macron, showing the economic growth held at a steady pace in the fourth quarter, despite the yellow vest anti-government protests. The full growth estimate was even modestly increased to 1.6% from 1.5%, as exports from companies such as Airbus help offset weakness in consumer spending. The scrap of a payroll tax or unemployment insurance left a number of households better off. Real disposable income growth accelerated to 1.3% in the fourth quarter, while the savings rate also jumped. And let's move on to markets. Following the growth questioning swoons of the past week, benchmark sovereign bond yields ticked up again first thing Thursday as investors scoured incoming data to assess the true state of the global cycle. But the two big red flags warnings of recession on the horizon continue to fly. The 3-month to 10-year U.S. yield curve remains inverted by up to 3 basis points, having gone negative for the first time since 2007 last week. Although normal 10-year U.S. yields were a fraction higher Tuesday, they fell to their lowest margin since last night since late 2017, in a heavy week of new Treasury sales that begin with a 2-year auction tonight. German 10-year bond yields remain below zero, and Japan's 10-year government bond yields remain negative to the tune of 7 basis points. Those warning signals from the bond market continue to unnerve global stock markets despite some steadying on Tuesday. Wall Street's S&P 5 index ended in the red again on Monday. Shanghai and Hong Kong followed suit in Asia today, and South Korea's Kospi was little change. Financial year-end flows helped Japan's Nikkei rebound 2% as the yen eased back a bit. The MSCI's wider emergency market index also caught some relief and managed to stay in the back for the day so far. European and US stock futures were flat ahead of the cash market openings. On the data watch, French industrial confidence fell below forecasts in March, but mirroring signals elsewhere in the world. A better reading is a service meant overall business confidence nudged higher this month. An unexpected rise in German IFO business sentiment index had already improved the mood on Monday. And looking into today, relatively quiet. U.S. March consumer confidence and February housing starts will be later on today. For those looking at the peso, Mexico retail sales are going to be out. Sterling underwhelmed as UK lawmakers grab control of the Brexit process. We already touched on this, and this is news from actually at the closing of yesterday, but it says options are narrowing and narrowing and narrowing. He said predicting sterling would drop as low as 120 with a no-deal Brexit and rise to as high as 135 to 141 if the May deal was passed. Against the euro, strengthened to 0.2% to 85.59. Investors are waiting for a eureka moment that brings clarity on the Brexit. Could be disappointed, said Nomura analyst Jordan Rochester. With the Prime Minister short of support, the Northern Irish Party propping up her government still opposes her deal. It's not clear whether May will begin her divorce agreement back to Parliament. Currency derivative markets signal growing caution about the pound with 1 month risk reversals on sterling versus euro and the dollar at multi-month highs, an indicator of the bearish or bullish investors out on the outlook of the currency. Risk reversals signal the short-term negative bets on the pound are piling up rapidly despite the broader calm in the spot markets. Interesting. Canadian dollar holds near a 2-week low as growth prospects worry. The Canadian dollar edged higher on Monday, but held at a near 2-week low as Canada's yield curve inverted further. U.S. stocks ended the previous session step off as fears of economic growth persisted. The short of oil having a huge rally. I don't really see much to like for the Canadian dollar at the moment, said Christian Lawrence, senior market strategist at Rabobank. I'm not really surprised given how things are getting domestically in terms of data. On Friday, domestic data showed weak inflation and a surprise drop in retail sales, while Canada's yield curve inverted for the first time since 2011. The 2-week low for the loonie came as top Canadian officials said that many Canadians question why Ottawa should ratify a North American Free Trade Agreement given Washington's refusal to lift the U.S. tariffs on exports of steel and aluminum. And on to the Australian dollar. The Australian New Zealand dollars won a reprieve from risk aversion on Tuesday as stock markets in Asia bounced and speculation mounted that stimulus was in the cards from the world's top major central banks. The Aussie clawed its way back to 71.21 after being as low as 70.66 at one stage on Monday. The Kiwi firmed to 69.17. Bonds took a breather from their meteoric rally with Australian 10-year debt futures just off a record high. Despite having almost 2 rate cuts in the forward profile, we think there's scope for 3-year yields bonds to rally further, said analysts at Westpac. They'll be supported by the view that the global yields will remain low and longer for an environment which inflation expectations are minimal. The RBA continues to resist pressure for easing, putting its faith in the resilience of the domestic labor market. RBA Governor Lucy Ellis on Tuesday dismissed concerns that the health of the labor market might be overstated and pointed to a range of indications in support. The labor market has unambiguously improved, she said. One can reasonably be confident in the steer the labor market data are giving us, and because it's coming from multiple independently collected data sets. The RBNZ is holding its policy meeting on Wednesday and is considered certain to keep rates steady while reiterating its outlook for no change until 2021. And lastly, dollar ticks up versus yen as risk aversion ebbs. The dollar rebounded modestly against the yen on Tuesday as Treasury yields pulled back from 15-month lows as investors reassess the risk of a sharper downturn. The pound stuck to a narrow range, and global markets recoiled on Monday in the wake of an inversion in the U.S. yield curve, which had signaled a recession in the past. The dollar has tracked U.S. yields, but the trend may run a course with further downside, seemingly remaining for yields, said Masafumi Yamamoto. The decline by U.S. equities has also slowed, and this has supported the dollar. It shows that the market's economic prospects remain reasonably good, with the Fed preparing to take a more dovish approach. The dollar edged up to 110.65, 110.06.5 yen, and put some distance from a 6-week low of 970 plumbed the previous day. U.S. consumer confidence and housing-related data was due later in the day and could provide near-term clues for the currency market. The dollar should rally further, supported if today's economic data indicators are robust, as strong data may be the only factor to prevent Treasury yields from falling further, said Junichi Ishikawa. The single currency fell to a 10-day trough of 12.73 on Monday, also hit by rising concerns about a slowdown in the Eurozone economy, but modest gains overnight after stronger than forecast German business confidence survey. Sterling was effectively flat at 31.97 after spending the previous day confined to a narrow range when British MPs wrested control of the parliamentary agenda from the government for a day in a highly unusual bid to find a way through the Brexit impasse. They will now vote on a range of Brexit options later on Wednesday, giving Parliament a chance to indicate whether it can agree with the deal with closer ties to the European Union. With that, let's go on and move into the analysis. And looking here at the euro, we had the 12.79 and 13.41. It's been, like we said, a relatively quiet day. You see the market is trapped here in a very, very tight range. If you look at here on the 2-hour, you can see just how quiet it is. Well, resistance is going to still be the same here at 13.41. And then we're looking at right there coming across here. And actually, per se, it's really 13.42. We'll actually move it up 42 and a half, so it doesn't sound like much, but it's actually 42, not 41. That'll be the rating system, and we're just mired right now. We're probably not going to get any real movement until we get into this U.S. data to generate some type of move here. And resistance that we had, and we're going to keep the support. So relatively quiet day, not a whole lot. We'll have to see if possibly some strong data or better data out of the U.S. will make the option to push this euro a little bit lower. Looking at the cable, well, we had 30.95. At this point right now, that market is going to hold. That's going to be that support here. We're looking at 30.95, just below there. If we get that push, from the stories you were saying is now they're starting to, bets are starting to pile up. It says, quote unquote, pile up for possibility to push lower. You can see why, because we're still up here, pretty good heights up in here, unless they reach some kind of a deal. So I guess, yeah, if you look at it from risk reward, you could move lower. And right now, I think the market may be, we may be on, I won't say the precipice, but I think we're at a point now where the market is getting frustrated and beginning to see, even though the data has been coming out of Europe, has been, not Europe, but I mean out of the UK has been good. Still, I think this whole idea where some of it, with them resting control for the day, but to me, there's just, you get this feeling of there's a sense of no direction. And if there's a sense of no direction, it just might be easier to push this thing down here, down to the 29. So maybe I guess that's what they're talking about. Bets on the downside starting to pile up. So with that, we'll stay with this 30.95 here on the support. But I can see where they're referencing is, if you look at it from this perspective, you see how far we've come off. And you look here, and they're looking for something positive to be spun out. And if something were, definitely would see that jump. And the data was certainly still going to support that. But, as each day and day and day goes by, it just seems like there's, not that everything looks woefully terrible, it just seems like there's really no outlook to get out of this morass. And from there, and you look at where we are we at the lower end? No, we're still way up here near the higher end. So I guess that does have the opportunity where you might come into a day, whether it's tomorrow or Thursday, where we just hit some stops and we just go lower. And if we do, if that is the case, then we could probably come down here to about 28.65-ish. You see here, we got some demand coming across. But for right now, support will be 30.95, and resistance, we're going to put it right there. Well, there is. That's at 32.65 we had on there before. So no changes right now. The Aussie dollar's worked up a little bit higher. We had 71.18 and we're just above that at this point. Here's a resistance level coming in right there at 71.30. take a look at it here on the 2-hour. Well, it'd be interesting if they could push higher. And certainly after defending this trend line, they're trying to push higher. We'll have to go with the level. And this is a big level too, which is this 71.42. So that's what we're going to go and adjust this for. And essentially where the rubber meets the road on a 2-hour close. But I think that even if we got it, I think for us to move higher, you'd have to get 2 consecutive 2-hour closes above 71.42 to really prove itself. And you can actually make the case that it's actually right there, 71.45. You can see right there. So 71.45. Support on a short-term basis is going to be 70.89. The dollar Swiss is trading relatively quiet here. We had our support here at 98.69. Pretty good move here too. Look, 98.69 to 99.96. Should be right there at 99.76. And the market just seems to be hanging here before the next drop. Support on a very short-term basis is going to come in right there at 99.06. 99.06. And let's see how well we hold up over the next few days. But certainly no big changes whatsoever here. And now moving on to the dollar CAD. Now, after securing this move above the 34.18 on Friday, it looked like this thing is ready to project higher and eventually get to 36.50, and it still can. But we did go in and see this market lose some steam in front of the right here at 34.49. That's where we had our bias chart resistance at, and unless you're kind of scalping it around, there's no reason to change this. If you're looking for an area right here, a volume area is going to be right there, split right there in the middle. You see that? Would come in right there, 34.27. So if you're buying it and you're thinking, well, I'll tell you what I'm gonna do. I bought it. I'm gonna take some off at 34.25 and then let's see if it rides. That would be it. You can see it right there coming in at 34.27 on a very short-term basis. But I don't want to split differences here. That is going to be a good area here if you make a run up here. But the key thing is, are we going to go and make the next leg up? And that's going to be 34.49 for right now. So we're going to keep that in tow. As far as for support on this pullback, and cruise moving a little bit higher again. It's going to have to be right there. At least you know where your risk levels are. It's going to be 33.58. If we get crude to make one more jump again. So you can be looking at 33.58. If crude moves higher and we get that move lower, it's really going to test the patience of bulls. I think it's warranted as far as the bullish move higher, but if you do, like I said, we'll probably see this slip again. And if that's the case, and crude makes a move higher, we can see it move higher if we get some good U.S. data later on. Then you may see where the market stays lower, okay? Because anybody here that got long and is trapped, they may keep the market under pressure and might be see one of these situations where we saw the same thing last week. As you see the market move lower and lower, late in the day it's still lower, and then sometime during the Asian session, then you see the market kind of stabilize and find itself and come back up. But right now, after the good move we had on Friday, there may have been people that got long looking for this now longer move, and I think eventually we'll move higher at this point. But that being said, there might be some late buyers that are stuck, and so they may be down 25, 40, 50 pips possibly if they bought late. And now those people are going to remain under pressure. And if we do see crude continue to rebound or push up a little bit higher, then you'll see them come under pressure. And we might find ourselves late in the day where there's no reason to buy it. And then finally we come around here, and then in Asia, then maybe the market bases itself. And then from there, we can work a little bit higher. So just, give an idea of what you're looking at potentially. Moving on to the dollar MEX. We saw a great rebound off of Friday, and we've seen this market pare back a bit. We came into, which was our support here at 1902. Our actual support was 190198, but we just kept it even, 1902. You can see the 19019 right there. And we came down, took that out for just a little bit. We're kind of holding steady. Could they pressure it a little bit? Yeah, they could a little bit. We're going to still keep the 19019. We're not going to move around. It could maybe move a little bit lower. I guess technically it could even come down to 1897 if they test those stops. But overall, we're still going to stay with this 19019. And resistance, we will move down here to 1911.6. Let's go and move into crude oil. Okay, we see we had support at 58.15. We got as low as 57.93. Not bad. We still have the potential. You know, I like this level in here, but we actually have the potential right there if the thing was to pop up a little bit. Right in there. I think we could pop up to there, and then we'll have to see what happens. But we're going to put that at 59.51. If we get good U.S. data, it might give it to allow one more last hurrah. If we're going to still pause in here, so we'll look for 59.51 support on a short-term basis. Very short-term, it'll be 58.55. We have 1044 here. We've pushed up higher here in the dollar yen. One of the guys was asking me, it was very, very quiet, late U.S. session. I mean, very, very quiet. But the guy popped into the chat room, Dax, and he was asking me about the 30-year yield. And so I popped that in there, and just to give, right now you can see this pumping up against this 1034. We'll take a look at that. This is the only time I use 4-hour charts is on the bonds. And you can see here from the work we did, I posted this in the room, you've got an inverted head and shoulders, okay? And that projection took you to 321, okay? And the 50%, which is 314 of this move here, we'll take a look at that. You can see the 50% coming in. Well, we came in here and ticked off the 50% basically right there. You see it coming across 314. Now, if you move it around, it might say 316. I had 314, but you can see where it came here and nicked it. And you can see the market pair back. We also have, if we were to blast up in here, we've got a nice little supply zone coming here. But I was surprised to see is when I was forming this at the time, we were actually at 311. We hadn't even quite made the high yet. And you can see here the high was 313, 50% I got is 314. And we're trading at I think it was like 310 or 311. It was working a little bit higher and eventually came right up here. And we came off pretty good, came off a pretty good chunk of change, which would make sense where the dollar yen is rallying back. So once again, if you look here on that 30-year bond yield, nice inverted head and shoulders. We hit the projection just about. Maybe we'd make one more last stab, and then there's a pretty good supply zone in here of 331 to 408. But makes sense where you had the dollar yen pair back in the sense of pair back up going higher. You can see that the 1034, that's been a key area. But possibly we can move a little bit higher. If you look here, we've actually been as high as 1041, and look at our resistance, 1044. Let's see how this US data goes. Right there, 1060 would be a good area right there with the dollar yen. Kind of splitting the difference. We'll even move it up a little bit higher right there. We'll split the difference between these two, between 1044 and 1087, and that comes in right there at 1063. If we get some good US data, and you got a nice little hammer bottom here too, also on the 2 hour. That confluence with what we were talking about in the 30-year yields. So probably want a little bit more, and at least down here to, at least I would think up here to 1063, but we'll have to see how the data comes out. Support is right there, 996. 996. Pretty good move back up here in the Aussie yen. We made it to the 78.36, but this is a very good, nice area right in here, right there. It's going to be 78.76. Well, actually, just if they can push it up a little bit higher on some good US data, actually move this to right here. 78.81 would be a good entry, very good entry. Support comes in right there, 78.20. 78.20, you can see that right here at this volume. We've already had, and you can see here the momentum has changed to move a little bit higher. I think we can move to test the upside, and yields maybe come off of these lows a bit. Overall, remember we did the analysis. We're still looking for eventual move much lower, but in the meantime, we did have a pretty good pull off in the S&Ps when they're trading up essentially at 28.50. So we've come off 50 handles. Okay, we're still trying to push up a little bit higher. 96.81 is that key area. Let's go move into the 2 hour chart. 96.81 is key on the daily. Could we make a push higher and really make a run here? If we look on the 2-hour, it's going to be the 96.92. 96.81 is huge on the daily. If we would get a big surprise in data, could we stretch? Well, what would be the key stretch? It's 96.92, but we look on her on the daily. Very key here. And that would actually, it would seem that we'd be able to take this out. That would actually take us past these retracement highs by just a little bit. So it makes sense. And I'll actually move this into, oh, there you go, 96.90. You see that coming right across there? 96.90, even maybe even a push up to 96.91. If you look on the 2-hour chart, there's your 92. So let's go with 96.92 on the cash dollar index. And it would be key if we close above 96.81 on a daily close. But 96.92 will be our resistance. Support's going to still stay the same here, 96.24. No changes here. And let's go move into gold. Well, we did make it to that 1323, and that's going to continue to remain resistance. There's no reason to go and change it. We've actually eased back from that 1323. We had 1309 as an area of support. I like staying with that 1309. No changes there. You can see this right there, 1308.88. So it's going to be 1309. No changes here on the gold market. Actually, that should be 09. Not sure why that's showing 4. I remember that yesterday. And I think sometimes when I have to reboot this computer, for whatever reason, it doesn't save those changes from the day before. I don't know why. Because I remember we were trading at around 13.17. I go, okay, well, you know what, 13.09, because that's still $8 away. So yeah, we'll move it up. And I remember moving up from 4 to 9. So let's go move into the bund. We're still holding steady here. If we were, the data is a little bit better, but it's still very, very weak. So the key is still, when you look at this, is going to be this key level here, 67.95. And if we're going to keep that upside, we may not see that for today, but it's keep in mind for the next couple of days. With resist for support on a very short-term basis is going to be right there, 67.43. We had 11,392, and we believe that's, well, and we did take a dip. We even went below this 11,392, so we're still continuing to slide back. And I think, like I said, with this weak data, I don't see it made it up there because interest rates are so low. But then when you come back to reality and go, well, wait a minute, we still have a weak economy, so you get this push low. And we've already had a pretty phenomenal run. So eventually, we're going to go to before we see real demand. I think that's pretty clear here. Right there, 11,235. And the upside, just looking at the levels right there, you can see that clearly, 11,450. If we do get an upside pop in here, they're going to be able to take out the highs here, but I think we'll be looking to run out of gas right there, 11,451. In all likelihood, we're probably going to stay quiet until we get to the US data. You can see how quiet the euro is trading. And the upside we're looking at is 96.92 here on the cash dollar index. I'm going to get this posted into the room, the bias chart. And thanks for joining us here on the European Crossover webinar.